We've spoken in the past on this channel about the issue of debt, whether it's personal debt, financial debt, whatever it may be. More and more Americans seem to be trapped in this debt spiral where they're borrowing more money than they can pay back. For example, credit card debt in America has reached all-time highs recently, with a record of $1.17 trillion worth of debt being accumulated so far. More and more US banks are facing the prospect of a growing risk as more borrowers are now defaulting on the debt that they're taking out. So it all begs the question, what is going on with America, and is the country heading for a massive debt crisis? Well, we're going to take a look and analyze exactly what's going on in the country in this video, try and break down what's going on and what the future looks like for America heading into 2025 and beyond. So we'll break all of this down, but before we do, it takes just 2 seconds. If you're new around here and you enjoy this video and enjoy these kind of updates, please do consider hitting the like and subscribe button down below. And without further ado, let's get into it. So the Treasury Department have just released their monthly fiscal statements and, shock horror, as you can probably tell from the title of this video, it doesn't make for pleasant reading. In the last 5 months, the US has run up an average cumulative deficit of more than $1 trillion to date so far. That's a modern day record. And according to this chart by the IMF, you can see here, the US is the third largest major economy running a fiscal deficit as a percentage of GDP. And for context, you can see that the US's fiscal deficit is larger than the entire European Union. So quite clearly, this is a big problem. And this is something that Donald Trump didn't really speak too much about during the campaign trail, because he's already ruled out doing things like cutting Social Security, Medicare, Medicaid, etc. All of those things would require borrowing more money in order to fund them, meaning the deficit and the debts would also increase as a result. Now, the one caveat here, and the wild card in this whole debacle, if you like, is Elon Musk's Department of Government Efficiency, more commonly known as DOGE. And if we look at what was raised versus what was spent by the US government in 2024, you can see here, $6.1 trillion worth of money was spent by the US government. You can see that there in total outlays. In total revenues, only $4.4 trillion was raised by the US government. So they raised $4.4 trillion, but they spent $6.1 trillion. They overspent on the amount of money that they raised. So it's no surprise that Doge is coming in saying we need to root out and cut out any unnecessary waste to try and balance the books. However, as Doge is aiming to save $2 trillion worth of money, so far, as we've explained in a recent video, their own results have been pretty underwhelming to say the least. They've only managed to cut $65 billion so far. Now, that is still a good chunk of money, and any waste should be removed and cut out immediately. But it falls far below the target of $2 trillion, and in the grand scheme of things with the US's budget and fiscal deficit, it's not really going to make that much of a dent. Now, it is worth mentioning that a lot of this overspending is a direct consequence of President Biden's policies. However, in terms of looking to the future, President Trump's policies won't exactly do much to kind of bring this under control. For example, the Republican budget, which has been backed and endorsed by Trump, included tax cuts that would increase the budget by an additional $4.5 trillion over 10 years. Similarly, in an effort to avoid a potential government shutdown, Donald Trump also put pressure on the Republicans to pass what he's calling a continuing resolution, which basically translates to, for the next 6 months, they're going to continue funding Biden-era programs, with a bit more money released, of course, for border security and defense. Now, on top of that, going off on a little bit of a tangent, you also have the wider economic policy too, with Donald Trump's tariffs on all goods that are non-American. Because now, goods that are being exported to other countries around the world, be it Canada, China, Europe, wherever it may be, they're now refusing, or certainly boycotting, many US products in an effort to protest Donald Trump's proposed tariffs. Just have a look at some of these headlines. Buy Canadian instead. Businesses vow to fight Trump's tariffs across the border. I feel utter anger. From Canada to Europe, a movement to boycott US goods is spreading. Danes, angry with Trump's threats, boycott US goods with fervor. Europeans boycott US products to protest against Trump's tariffs. And if there's less economic growth in the US, then you're likely to see, well, I say likely to see, you move closer to a recession, but definitely towards an economic slowdown, which again is not good for the US economy or the US government because a slowdown means more people claiming benefits rather than paying taxes. And on top of all of this, you also have the issue with the Federal Reserve and the interest rates, because at the moment, the interest rates are far too high. And if interest rates are high, the cost of borrowing dramatically increases. For example, let's say you took out a loan of $100. Keep things simple. Interest rates were set at 10%. You would then have to pay back $100, the original $100 that you took out, plus an additional 10% on top. So you'd pay back $100 plus an additional $10. So $110 in total for the $100 you borrowed. Now, if the interest rates go even higher, which is what the Federal Reserve have done, then let's say, for example, the interest rate is 20%. You would take out $100 in a loan. You'd have to pay back the original $100 plus an additional 20% on top. So $100 plus $20. For the $100 loan, you'd pay back $120 to the bank. So, because the interest rates were higher, you were forced to pay back more money as opposed to when they were lower at 10%, which is where many people are having an issue, because as a result of the interest rates being so high, they are now having to fork out more of their money in order to pay off the debt that they've accumulated. And in many cases, that just is not fair. So, Trump also has to look towards reducing the interest rates to try and ease the burden on the American people. And of course, the big danger here is if the US continues to issue new debts, then they could enter a debt spiral where high servicing costs forces them to keep borrowing money. As a result of that, they're then trapped in a never-ending debt spiral where they can't pay their way out of trouble. And the second thing Trump may want to worry about is the dollar's reserve status. Now, the US gets to borrow as much money as they can simply because the dollar is the world's reserve currency. It's the most powerful currency on earth. And while there are reasons to be skeptical of the idea that the dollar might lose its world reserve status anytime soon, it still is the most popular currency out there by some distance, especially if you look at the gap here between the US dollar, which is the red line, and the euro, which is the blue line. But when you factor in how other countries view the US at the minute because of the way Trump talks, his rhetoric, his stated desire to weaken the US dollar, his trade policies, his tariffs, of course, none of these things will actually be helpful in terms of securing the dollar's status as the world's reserve currency. So, one of the more big questions, as individuals, as citizens of the world, what can we do about it? How can we protect ourselves during this period of economic instability? Well, let me just say right from the start before we go any further, just as a quick disclaimer, I am not a professional licensed investment advisor, financial advisor. I'm just a guy on YouTube offering his opinion on a video for entertainment purposes only. That's it. Okay, what can we do about it? Well, one of the key assets, and this is something I've spoken about in the past as well, that has seen a tremendous rise in terms of the price and in terms of investors flocking to it as a safe haven asset, is gold. The demand for gold has shot up so much that we've seen the price for 1 ounce of gold shoot up to above $3,000 for the very first time in its history. And just have a read of this. Gold broke through the key $3,000 barrier on Friday for the first time as investors piled on to a historic rally in the safe haven assets. Key word there, safe haven assets, in order to seek cover from economic uncertainty sparked by US President Donald Trump's tariff war. So, investors, in a time of uncertainty, are now flocking to gold because it's the safe haven asset. It's a way to protect your money and protect your wealth. And when you factor in that the US stock market saw a staggering bloodbath of $5 trillion worth of stocks in just 3 weeks' time being wiped out amidst mounting uncertainty, it's no wonder investors are flocking to something that's regarded as a safe haven asset, because right now, uncertainty is what's causing the lack and loss of confidence in the United States economy. Just have a look at this. Is President Trump's trade war fueling this financial turmoil in the stock markets? Well, one of the biggest culprits behind this downturn, President Donald Trump's intensifying trade war. Fresh tariffs, notably on Canadian steel and aluminum, have spooked investors, causing widespread market jitters. The unpredictability of US trade policies has only exacerbated the crisis, leading to extreme market volatility and investor uncertainty. But it's still early days. Let's wait and see what Donald Trump and his administration do in terms of tackling the deficit crisis, the debt crisis, and getting the US back on a stable economic footing. So let's wait and see what happens. Thank you all for watching. Be sure to like and subscribe if you enjoyed this video. Drop a comment down below. Let me know your thoughts on the situation. I'd love to hear from you all. I'll be returning soon in the coming weeks, but until then, see you all later and take care.